What kind of a market are we really in right now as we gear up to getting further and further into Q4 of 2025? Well, simply put, in the month of August 2025, just 2 months ago, 56,000 buyers that went under contract, meaning they made an offer, it was accepted by the seller, ended up backing out of that deal in the month of August alone. The highest number of its kind since 2017, almost 10 years ago. We're looking at this type of a lopsided market. The big question is, why are buyers experiencing such high levels of cold feet right now in this market? That's what we're going to be covering in today's video. We want to know why the buyers are getting all their ducks in a row in preparation for a purchase. And then once they get under contract, all of a sudden they get cold feet and decide to back away from that deal. What is the root cause of that? Well, in today's video, we're going to be exploring three primary reasons as to why a buyer might go through all that trouble to prepare to make a purchase. And then all of a sudden, at the very last second, when they see light at the end of the tunnel, they back away and decide to go the opposite direction. So if a video like this sounds like it could be of service to you, stick around. We're jumping into it right now. Hey, if you guys are getting ready to jump into the market in some capacity, whether you're buying, whether you're selling, whether you're doing a combination of the two in the near future here in Central Oregon, and you don't have a realtor lined up yet, please reach out to me. We would love to be the ones that help you with that transaction, but it starts with you guys calling us or texting us. You can see the phone number right there. It's all across the channel as well. Give us a call or shoot us a text. We'll get that initial conversation on the calendar so then we can figure out what the next course of action should be pertaining to your real estate transaction. Thank you guys for watching these videos. And now on to today's content. So clearly we're in a very lopsided market. Obviously, it's the consequence of what happened just 5 years ago now, 2020, 2021, when we had such a different market back then where it was favoring the seller. Now the pendulum has really swung the other direction, and there's a lot of buyers that are actually getting great deals that are going through and finalizing transactions, but there is still a healthy amount of those buyers that have the cold feet, have the buyer's remorse, and start to question their own decision making as they get further and further into the commitment of a purchase. After all, a home purchase is a monumental sized decision, both mentally as well as financially. And so it's something that you really, really need to consider before you jump into that arena. But those that do jump into the arena generally have pondered it for a long time. But yet, even once they actually get into the physical act of going through a transaction, they still, many of them, 28% actually, are getting that cold feet where they want to back out by the end of the transaction period. And that's something that is totally fine, but it's also a very emotional situation in the market. And I think that has a lot to do with it. It's the psychological effect of where we're at in the market right now. The sentiment as of this moment right now is that prices are going down. So the big question a lot of buyers ask themselves once they go under contract is, what if my house all of a sudden goes even further down in value after I close on it? Am I getting a good deal? Am I getting the lowest possible price? What if things just completely flip upside down? There's many buyers that are a little bit more experienced when it comes to transactions with real estate that have been around for, say, 20 years or maybe even beyond that, that remember 2008. There's plenty of buyers that are brand new to the market or that were not old enough to participate in the market back then, but there's still a plentiful amount of boomers that are in the market right now, and they are starting to experience a little PTSD. Maybe they're starting to have some of those memories creep back in and haunt them a little bit when it comes to making those decisions. And we can't blame anybody for that, right? That was just the nature of it. But it's one of those things too, where we have to remind ourselves, those that actually held through the actual doldrums of that recession back in 2008 and still hold that real estate today, they are probably reaping the benefits at a very, very high level. It's because they didn't let the emotions control their decision making. They also had a long-term outlook. Your future self will thank you for purchasing real estate in Bend, especially as prices have gone down considerably in the last 12 to 18 months. Will they continue to go down? I don't know. Maybe they will. But the reality is that there will be a bottom at some point. We may have already experienced the bottom. And people that see the trend going down tend to think that trend is going to continue forever, when in reality, it's not. People have to find places to live. Right now, the cost and the affordability aspect of buying real estate is still at a very, very challenging level, and interest rates are slowly coming down, but they're not coming down enough to really, really shake the market up. So, what is happening as a result? Prices are coming down as a result of homes sitting on the market for longer and longer periods, as a result of having more and more inventory, people that need to sell. So, what is the big hindrance for those that are getting cold feet when looking to buy right now? 28%, maybe over 30% of buyers this year have backed out of a deal after they've been under contract for one. So they were serious buyers. They were pre-qualified. They had the letter in their hand and they chose to back away and stop for some reason. Well, we're going to be exploring three primary reasons as to why that is. And we're going to jump into number one right now. Reason number one, the buyer got cold feet after being under contract to make a purchase. The inspection came back and it was littered with all kinds of things that the inspector called out. And it just became kind of a psychological barrier, a hindrance, another further problem to have to deal with. And I think that has a lot to do with the state of the market right now. The sentiment is that prices are coming down, the sky is falling, things are not going to be looking good anytime soon. And so, what is another problem to be tacked on to the back end of a possible real estate deal? Like maybe the roof needs to be replaced, or maybe there's something wrong with the plumbing or the electrical, or just all kinds of things. I mean, the inspector's job is to call things out. Every inspection report, including brand new homes, is going to be littered with all kinds of stuff. It's a 5 to 7 to 10 page or even beyond report. And so it's always going to have things and their negotiating tactics. But when a buyer feels a certain way, like, okay, the sentiment of the market is bad for buyers, or the prices are coming down, can they negotiate further? Yes, savvy buyers tend to do that. And there's been many, many deals that were actually held together as a result of further negotiations. Even when that seller said, all right, you got me pinned against the wall. This is as far down as I will go on price. There will be no negotiating with inspections. Well, sure enough, after the inspection report comes back, there's another surprise problem with the house. And all of a sudden, negotiation happens anyway. And guess what? The buyer tends to sometimes win that battle. But there's also a fine line because sellers, some of them are in really good positions financially. Maybe they own their home outright, or maybe they have 80% equity within that home and they have a great interest rate from 4 years ago. So, do they need to sell? Is it absolutely necessary? Not necessarily. So, you got to still find that fine line. And that's what a realtor's job is to do, is to basically feel out the other side of the party to see what their motive really is. But that is really the number one reason why buyers who go under contract right now are ultimately backing out as a result. After they get that inspection report, they see a laundry list of problems they either don't want to take on, or they cannot come to an agreement because they're trying to negotiate their price down further. Reason number two why a buyer might get cold feet after they go under contract. Well, they went to their loan officer and they got their pre-approval letter and they ultimately made an offer that was accepted. But after they went into underwriting during the escrow period, the lender and the underwriter, it's the underwriter, they ultimately said, we're not going to lend on this particular borrower at this time. Now, that's not completely the borrower or the client's fault, the purchaser, but it is a reason why deals are falling out of escrow right now. It's a primary reason. Lenders are very, very buttoned up right now in this state of the market, and the underwriters, those that are behind the scenes right now doing all the due diligence, they're the ones that are uncovering every rock about your history financially. They're the ones that are ultimately making that decision. Can you and will you? Do they have confidence in you making those payments every single month? Right now, interest rates are really high, comparatively speaking to the last 5 years. Right now, prices remain high. Now, they're both kind of coming down, but they're not really coming down enough to really shake the market up and really give lenders that confidence, like, okay, we are ready to start giving away money again and trying to place our loans. They're not, their quotas are much lower than they were, say, just a couple of years ago. But another piece of food for thought, the average credit score for a borrower right now in this market is 736. That's the highest average credit score for those that are getting loans to close in over 5 years. So if you think back 5 years ago when rates were at 3% or 4%, when it was much cheaper to borrow, well, the the minimum credit score, the average credit score was much lower as well. So right now it's very buttoned up. Lenders are much more strict about who they are entrusting the money to continue to make those payments, especially with the sentiment of the market, right? The sentiment of the market is that house prices are coming down. Will they continue? They will bottom out at some point if they haven't already, but that's also something that a underwriter and a lender takes into consideration as well. How much confidence can you give them when you're trying to apply for a loan? And so a lot of people will go into that initial application process and get that pre-approval letter. And then after, say, 30 days go by during the due diligence period, they don't quite get to the closing table because there was something off or they just weren't quite up to the standard, the very strict and buttoned up standard that these lending institutions are upholding right now in this current state of the market. Reason number three, why a buyer might get cold feet after they go under contract in purchasing a home and back out. Well, it's because they couldn't sell the current home they owned. Right now, there are more homes that are going under contract that are contingent on a sale of something else before it can close than we've seen in a long time. And that's just the nature of the market right now. Sellers want to sell. There's actually 500,000 more sellers nationally than there are buyers right now. So, what does that mean? If there is a surplus of sellers, well, they got to be a little bit more flexible about how they go about negotiating with a buyer because those buyers are very scarce and they're sacred and they're just those you got to be thankful for them right now. And that's the nature of it right now. If you get a buyer interested in your property, don't let them go. Don't cut that line loose. Figure out a way to make it work unless they're completely unreasonable. But the reality is that many homes right now are going under contract with the intent of closing based off of something else needing to sell first. And what is interesting too, this has happened multiple times to me this year alone, is that I've had clients who were ready to buy something here, but they needed to sell somewhere else. But then that home that they were selling ended up being contingent with another sale before that one. So there were like three or four dominoes that had to fall. And when you get to that stage, it just becomes kind of a challenge, really, because you can't do anything from your end. Everything is like three or four generations preceding you, and you have no control over the outcome. So, a very challenging aspect of this market right now are contingent sales. They are happening more frequently than they have in the past, especially 4 or 5 years ago when a seller would get multiple offers. And if there was anything that was contingent, it was just completely rejected right away, dead on arrival. But now it might be the only offer that a seller's getting. So they must be reasonable. If they want to sell their home, they got to figure out a way to be flexible. And so, again, that is another primary reason why it's not happening because deals are falling through by the wayside, especially, if you use the first two of this video as a means to see if a contingent offer could ultimately get pushed through. Well, sometimes the inspection goes bad with that contingent offer. Sometimes the financing falls through. And so it's all kind of like a paradigm just working in synergy because it's a challenging market right now. We're trying to navigate it, but it's also the consequence of what has happened dating back 5 years ago when the rates were so low and everybody was borrowing money for next to nothing. And now they're out there enjoying those mortgage rates and they have these homes that have equity, but they got those golden handcuffs on. So this is all kind of cyclical. This was going to be the byproduct of what happened 5 years ago, but we've got to work ourselves through it. You just got to be able to adjust, figure out where the opportunities are in the market and take advantage of them because there are opportunities everywhere. It's just a matter of kind of navigating the chaos emotionally and not thinking that the sky is going to fall and the bottom's going to fall out. It's not going to. We could have bottomed out already. We could be going back up. We don't know for sure. Only time will tell us when the bottom was. But if we know anything about history is that it will bottom out and things will start to go back up as time goes on because again, real estate for the long term, it's always been a very, very good hold. And it's something that we don't say as financial advice, but it's something that we always encourage people to do, especially if it's their primary residence. If you're going to live there, you might as well live there and then enjoy the benefits of the appreciation over the long haul, especially in Bend, Oregon, a very high in demand place. So my name's Ryan, I'm a licensed broker with eXp Realty. Thank you for listening to this video And if it's your time to reach out, it starts with you guys. Call us or text us. Get that initial conversation on the calendar so we can figure out what the next course of action should be for you. Thanks again for watching. We'll see you on the next one.